Look, it was a bit of a shock to the system when that separation happened, and it wasn't like it was something that I was planning, and it was more that I'd gone to full-time work. Definitely being financially independent gives you a level of freedom. You're not desperate, you're not dependent, you're not leeching. You can actually do what you want. You don't need another person to help you do what you want to do for the rest of your life. I think it's just so important for women.
What kind of tips do you give your clients when they're looking for other ways of generating income?
That's a really great question, Dion, because I actually have been encountering this quite a lot. Cost of living is high, and we are trying to get those extra dollars in to help subsidise our incomes. I love the self-managed super fund structure. It offers control, flexibility, and really broadens your investment opportunities. Having a self-managed super fund allows to make investments into what matters to you. That flexibility, that control, that diversity is financial empowerment at its best.
What does it take to be a financially empowered woman? And what can financially empowered women do together to change the world? A shocking statistic is that around 400,000 women in Australia are at risk of homelessness, and the cause of this is the lack of education about how to build a financial foundation, starting even before we first enter the workforce and well into our retirement years. My name's Dion Payne, and I'm the founder of the Financially Empowered Women podcast. I'm passionate about ending homelessness, and as part of that passion, I chose to look at the systemic barriers that are causing homelessness for women in the first place. The Financially Empowered Women podcast is designed to bring you the best experts from around the world to increase your financial know-how and give you practical and women-specific tips to overcome the challenges you might be facing, such as how to negotiate a better salary, demystifying super, or how to navigate a separation and ensure the assets are distributed fairly. My role is to provide you with the best information out there to change your trajectory and become a financially empowered woman, because you deserve it, and the world needs you more than ever to own your worth and help others to do the same. Hi everyone, and welcome to the Financially Empowered Women podcast. I'm your host for today, Dion Payne, and today I'm joined by Lina De Marco. Let me tell you a little bit about Lina. Lina is the founder and CEO of Ademus Business Solutions, a chartered accounting firm servicing small to medium-sized business and family groups. She offers her clients the power to shape financial success and drive transformative change. Lina has been a chartered accountant for over 25 years. She started her career straight out of high school with a Copers & Lybrand, a Big Four firm. She then discovered her passion for small business and moved to William Buck before starting her own practice. She holds a limited financial services license and is also an SMSF auditor. She is the president of the Auditors Institute and holds an honorary treasurer and advisor role for several non-profit organisations. She is also on the panel of advisors for Inspired by Women. Lina has a strong belief that good quality financial and tax advice is a basic necessity in life, and it should be made accessible to everyone regardless of their financial position. Welcome, Lina.
Thanks, Dion. I'm really excited to be here today.
Oh, I'm excited to have you as well. There's so much in your bio that is gold. I mean, I love the fact that you have a number of non-profit roles on the board, and that you're sort of head honcho at the Institute of Auditors. So, I mean, obviously you've done a lot, you're doing a lot. Where did you get started though?
Well, pretty much, I started straight out of high school. So I wasn't one of those lucky people that had 3 months of holidays after HSC a very long time ago. I pretty much finished, and something like the 3rd of January, I was at work, working in an office, feeling very overwhelmed in a very big firm in mining tax. So definitely completely the opposite of what I'm doing now. But I loved maths and I loved numbers. And to be honest, my careers advisor said, hey, I think this is a great path for you. Give this a go. Try this cadetship. And at that point, you're just taking on all the advice. So I went, sure, I'll give it a shot. And I was offered actually several cadetship offers from other firms at that time, Deloitte and KPMG also, and chose Coopers and Lybrand. And it just all went from there.
That's fantastic. So you obviously had a knack for numbers, and you fell into something that felt really right for you as well, because you've now had a really long career in the accounting
absolutely.
world.
I started my practice when I had my first child, something that most people probably don't do. But after 3 months, I was feeling a little, I guess, bored in terms of just with the household and the baby, and I just needed to have that mental stimulation again. But at that time, the accounting environment was very different to what it is now in terms of achieving that quality of life balance. It was a very demanding environment, lots of hours. And I thought, how am I going to do this with the baby? Because I still didn't want to give up. I wanted it all. I wanted to still work, but I didn't want to miss out on being a mum and all the opportunities that came. And, I came from a household where mum was helping at school and, the P&F and would come in the classroom for reading. And I remember feeling, I really loved that. And so I really wanted to pass that on and do that with my children. So I started the business and I kept it sustainable and small for about 15 years to be able to still be a mum and work. And it was hard. I mean, I used to do all the daily children's stuff during the day and I'd switch the computer on and work, from 8 till midnight or a bit past that. So it wasn't easy. And I did have to have that juggle, but I was able to be a mum and kept all my registrations up to date so that, back in 2018, I went, right, I've done enough of this and now I really want to get back to working full time. And I have continued to grow the business since then and pretty much did everything that you mentioned in the last 8 years. So it's been a pretty busy time, but very rewarding.
Yeah, absolutely. And look, kudos to you, I want to say, because I did also read that you were a single mum, at least some part of that journey as well.
Yes. So, for the last 4 years, yes, which is hard because it was when I decided to go full time and to, which wasn't a big step in itself for the family adjustment. So, yeah, a lot happened within that, within half of that time frame. So, but look, the kids are much older now. My eldest two are in uni. And I have a 12-year-old, so we're still just started high school. So 6 years to go. I'm on the home straight. No more school fees.
I love that. And look, this wasn't somewhere that I was going to go. I mean, I've got my questions here, but I'd love to hear your experience as somebody that has had a separation, but also been able to sort of stand on your own 2 feet with your business, because it seems like you future-proofed yourself right from the beginning. Was that always the plan, or how did that happen for you?
Look, it was a bit of a shock to the system when that separation happened, and it wasn't like it was something that I was planning, and it was more that I'd gone to full-time work. But look, definitely being financially independent gives you a level of freedom in terms of just being able to do what you want to do. And in that separation process, it really helps because you're not desperate, you're not dependent, you're not leeching. You can actually do what you want. You don't need another person to help you do what you want to do for the rest of your life. So, I think it's just so important for women. And I actually see a lot of women who are clients and who are separating, and I help them, coach them through that process, not from a legal aspect, but more from a monetary aspect, because what I have found is that, and this could be a generational thing too, that women they tend to be of my age group, have this reliance and dependency in terms of financial literacy. And they come to me and they say, he did everything. I don't even know where the bank account is, or I don't even know how to operate the bank account. He paid all the bills. And I find that as, it's something that I'm teaching my kids who are 17, 18, getting invoices to pay from uni. Yep, go on, use your BPay. This is what you need to do. Here's your card. I've set you up an account. It is so important to as a parent, and after seeing what I've seen, to really teach your children to have some idea. And it also makes me think about the education in schools, in year 11 and 12. I think back in year 9, they do one module in the whole of the 6 years of high school on financial maths, percentages and this and that, and how to calculate a budget. But there is no sort of study skill unit or program that is teaching them the basics, understanding what a bank statement looks like. And it's a real lack, I think, in our education system, because it really needs to start from there in terms of having an awareness about finances. You don't have to be a genius. You don't have to have a degree in finance to be able to work out the basics. So I find that it is lacking on the education. And so as parents, we have to do things to try and instill that, especially in our girls, not to have this dependency on a male. And to be honest, my son's probably as clueless as my daughter is at this age group. If we're talking, they're 18, 19, they're a year apart. So what happens, what is happening in society for him, for example, in the next 10 years, all of a sudden gains all this knowledge, but the girls don't see that as something that's really important. Now, I'm talking very generally here, but it's what I'm seeing of women that are coming to me in this position where they've separated and they don't know what to do. So, for me, I think it's really that empowerment is so important. And as I said, just a few basic concepts is all that's really needed.
Yeah. And I agree with you on that 100%. And it's really interesting in terms of the conversations that I have with friends and with people in my network. And in some way, shape or form, and it doesn't matter what their income level is, there's always some way that they're finding they're not as financially empowered as they could be. And I find that really interesting. And I loved what you had to say about the lack of education in schools. I don't love that there is a lack of education in schools, but that is a problem. That is something that people do keep bringing up. And I think it's something that's really important, particularly for girls. But I also do believe it's important for all of our young people, because if we can get everybody to have good money habits, I think a lot of the things that happen in society probably wouldn't happen.
Yes, definitely. I mean, having just those basic concepts of, set yourself a goal every 3 months. Doesn't have to be something extraordinary, but sit down, give yourself half an hour every 3 months and have a goal. What is my financial goal for this quarter? Okay, I want to go and do some study overseas. I need to save $50 a week. Like, they're the basic foundations, and stick to it. Look at your spending, spend some time. Okay, well, here's my credit card bill, or here's my savings. Where's my money going? Do I really need, a pair of Nikes every month? Is that really something that's necessary? Can I pull back on that? And what impact will that have? So I think for me is having discipline means financial freedom. Now, discipline does not mean that you need to live a life of depravity and deprive yourself of all the fun things. But it's a discipline of sitting down and saying, okay, yes, I want to go out once a week. My budget for that night, and I know it is expensive. And I'm hearing this from my young kids who are just starting to get out there in the world. Mum, this costs this. And I just had to walk into this club and it was like $50, right? So it's about, you're starting to, I can see that they are starting to open their eyes as to how much things cost. And it's about sitting there and saying, okay, 3 months in advance, short time period, realistic, achievable goals. And that's where you have these basic foundations that then as an adult, they start to be automatic, and you don't feel overwhelmed, and you don't have this fear, okay, that you have, and your mindset changes. You don't need to earn a lot of money to be able to plan, okay? Because the smallest change that you make to your behavior over time will be extremely beneficial.
Yeah, absolutely. As you were talking, I was thinking about my daughter, and right now she's saving for a trip to Europe, and she wants to do that at Christmas time. So this is a really great exercise for her. She's 15 years old. She's doing babysitting. She's wanting to do other types of work as well, but she's quite specific about the types of work that she wants to do. She wants to find something that has a high hourly rate, so she doesn't have to do that, which is fantastic, and I really support her in that. But yeah, the reason that I bring this up is because she's always needing to make these choices. Is she saving for this holiday? Is she going to put all her money aside for that and just have a little bit to spend? Or is she going to go to Pacific Fair, which is just up the road from us, and go shopping? Or is she going to go to the local under 18s club, which is $35 every time that she goes, So it's fascinating to see that happening for her, in terms of she's earning her money and she has to make choices. And then it's which of these choices are actually going to bring me joy? Yeah. So on that note, actually, one of the things that I've been talking to my daughter about is, honey, you need a side hustle. What are you going to do for a side hustle? And I know that this is something that you often talk to your clients about as well. So what kind of tips do you give your clients when they're looking for other ways of generating income?
Yeah. And that's a really great question, Dion, because I actually have been encountering this quite a lot. And, I had a client just last week say to me she's fully employed, but cost of living is high, and we are trying to get those extra dollars in, to help subsidize our incomes. So there are a lot of things that you need to think about. So first of all, get clear on your structure. Generally speaking, as a small business, a sole trader is probably the cheapest and the easiest way to trade initially. Definitely speak to your accountant before you decide on anything. Okay, it's always great to just get that information from them, and they will help guide you. The second thing that you need is an ABN, which is an Australian business number. So anyone that you are invoicing or any sales that you are making, you need to have an ABN, and you can do that yourself online, which is quite straightforward, or once again, you can reach out to your accountant for some support in that area. In addition, depending on how much you might be generating, if you're generating over 75,000, during that process, you may also need to register for GST. Okay. The third item is to separate your finances. Even if you're only earning a little bit, it's a really good idea to set up a separate bank account and have all your income and all your expenses for that business coming out of that. It'll help making track of your income and expenses a lot easier at tax time, and it can act as your only record keeping if that's how you want to be, because you can then extract that bank statement in a CSV file, send it to your accountant, and then we can, do the rest for you essentially. Otherwise, there's some really great little record keeping apps that are available for small businesses. I wouldn't recommend Xero MYB because they're too high level for anyone starting off a little side hustle. But there are other apps such as Rounded, Zoho, Expensify, Wave, and there's also the ATO free app. Under the ATO app, there is a My Deductions function, and you can also use that to track your business income and expenses. Then you've got obviously tax. Okay, so when you're earning some additional income, obviously there's another part of your tax return that needs to be completed, okay, which is a business schedule. Now, unlike your employment income, where your employer is taking out tax along the way, during your first year of business, there's no tax being paid. So it will be likely that there will be a tax bill at the end. So my advice would be to put away perhaps about 20 to 30% of your profit that you're generating. So that's your income after your expenses, put away 20%. And that way, when you do get your tax bill, it's not so overwhelming. Now, the last thing would be also a bonus tip is insurances. Okay, so if you are selling products to the public at large, or your side hustle involves some sort of, advisory role, it's really important that you get those insurances, even if it's a small amount of income that you are generating, because things can go wrong. So you need to have a look at product liability insurance and perhaps professional indemnity, depending on what you're doing. So those areas are probably some of the main things that you would need to think about if you're looking at starting a new business.
Yeah, that's really helpful advice there, Lina. Thank you. I do have a question, because I know that sometimes you can say, "Oh, I'm doing this, but it's a hobby." What's the line between a hobby and something where you would do all of this for?
Look, it's about there's tax is all about case law and precedent, and yes, there's a rule, but it's not clear cut in this area. Usually, when there is a recurring nature of what you're doing, is really when we're sort of thinking, well, this is more of a business than a hobby. Okay. So if you're, for example, making candles, okay, that's quite a popular thing to be doing. And you might go to a stall, or you might go to a market once every 3 months. You might get some online sales occasionally, or you might put a post on Facebook or Instagram, and that might get you a couple of sales. And that's about it. I mean, that's more of a hobby, right? So I probably wouldn't be going to all this extreme. But if you've got a market stall every week and you're doing that consistently, or there's a particular market, usually they're not every week, but it might be, the first Saturday of every month, and you're doing that on a regular basis, and there's regular orders coming through online, or you have, your network of friends, or it might be school mums or whatever it is that's happening, and there's that regularity, then I would say just probably put this all into place and start, recording things correctly. So it's really about, regularity and scale. So even then, if you, for example, are doing this on a weekly basis, but you're making 1 sale a week, I would say, yes, the regularity is there, but is the income there? No. Okay. So there's no sort of clear-cut amount, so to speak, that says, okay, if you're earning over this amount, then it is. It's really just looking overall at what you're doing. So once again, have a chat with your accountant. You might, what a lot of people do, and what my experience has been with clients who have done this, is that it does actually start off as a hobby. Okay. So they will just dabble in something, and then it does start to build. And then I get a call and say, hey, look, I've been doing this, but now I think it's ramping up. So I think we need to do that properly. So you may not have to set all this up from the get-go. Just really depends on the business, what you're doing. Consulting is probably a little bit different, because you find that consulting will be more regular from the get-go if you're on some sort of contract basis. So that ends up being a little bit different. So that would be, okay, no, I need an ABN straight from day one. So sorry, no clear-cut answer there. Really depends on the facts of everyone's situation.
Yeah, but that's really helpful advice, actually, because what I took away from that was the regularity and also the income. And I suppose you mentioned about consultants, how it would be a bit different, particularly if they need insurances. It would be hard to argue that was a hobby.
Correct.
Yeah,
Correct.
yeah. Well, that's fantastic. And previously you were talking about tax, so that segues nicely into my next question, which is just about, we're coming up to the end of financial year. What are some good tax planning strategies that you feel that you could share with our audience?
Yeah, it's definitely timely to be having this discussion, because you really have to spend the money before 30th of June to be able to get that tax deduction. A lot of people are very familiar with your usual work-related deductions. And if you are not one of those people, or you're doing e-tax on your own, or you have an online accountant who's not very engaging and prompts you into the different tasks, I've actually created a checklist that I'm happy to share with you on some of those really common, regular, basic deductions. But the ones I want to talk about today are probably the ones that people aren't really aware of. And one of the biggest tax planning strategies is utilisation of super. Now, as we know, unfortunately, women have lower super balances due to the fact that, like I was, caring for my family for, a lot of that time and also doing part-time work. So when it comes to retirement, we definitely have a lower balance in comparison to our male counterparts. So utilising this strategy that I'm about to share with you is a way that you can avoid being one of those statistics and also get some tax benefits. Okay. So the ATO allows us to contribute a tax-deductible contribution of up to $30,000 every year. Now, your employer will contribute part of that. But unless you are earning over $260,000 a year, there will be a gap, meaning that you wouldn't have used up all that whole $30,000 allowance for the year, so to speak. So what you can do is you can salary sacrifice some of your weekly wage for an additional tax super contribution into your super fund. Now, as it is already May, that's probably not great to do because you've only got a couple of months to do that. What you can also do is just do one lump sum payment and make sure it hits your super fund before the 30th of June to be able to claim a tax deduction for that super in your tax return. Okay. Now, in addition to that, if you have a super balance of under 500,000, the ATO a few years ago brought in some new legislation called a catch-up contribution. What this allows us to do is that irrespective of this $30,000 limit every year, you can go back 5 years. And if you have been short paying your super and not up to that 30 cap, the 30 has changed over the years. So it's 25, 27, now 30. The ATO says, we will let you do a lump sum payment of the last 5 years of catch-up contributions that you have not made in one financial year. Now, this can be particularly useful when in a financial year you may have some additional income. And that might be from maybe the sale of an investment, such as capital gains tax, or part of your salary might have been through an employee share scheme, which doesn't get taxed up front. So we can then work out what this catch-up is. And in some cases recently, I've been able to eliminate that whole capital gain. So client has sold an investment property and they've paid zero gain by putting this money into super. Now, yes, in the super, it pays 15%, but if they had had that capital gain in their personal tax return, they could have paid 47%. So we are then limiting the tax on this gain to really 15%, because that's when you put money into your super fund, you taxed at 15. So I really encourage you to think about your catch-up contributions, because it is a use it or lose it, right? So at the moment, we can claim from 2020. So if you don't want to put a huge lump sum in one hit, or you don't have the cash flow, just look at 2020. Do I have a shortfall from that year? Yes. Well, then I can just put that amount in my tax return, into my super before the end of the year, and I'll get a tax deduction for it, because that will lose, like from 1 July, that year's gone. Okay. So I think this is a great way to boost your superannuation savings, get a tax benefit at the same time. The second area is self-education. As women, we don't invest necessarily in ourselves. And that's from probably a lack of time and potentially, lack of spare money to do that. So the ATO allows us to claim a tax deduction for upskilling ourselves in the areas that we are currently employed in. So it's a great opportunity, especially now that it's April, if you are thinking perhaps of, doing some courses related to what you're doing to potentially increase what your salary is or what your worth is, then my suggestion would be if you can, pay that up front, you'll get a tax deduction much sooner rather than at the end when you finish the course, because you'll get your money now. So that's one area. The third area is income protection. So protecting yourself in the event of an illness or an accident that happens outside of work is very important in terms of having that just financial stability when things, come out of the blue. Now, income protection is a tax deduction in your personal tax return. A lot of people actually say, no, I pay that out of my super because I don't want to use my money. I just use my super money. Now, unfortunately, on your super balance, it does have a compounding effect of actually reducing your retirement savings. And in your super fund, it's not tax deductible. So if you were to pay that outside super, you get a tax deduction for it. Then I have the converse where I have some clients that were paying their life insurance as outside super. So paying your life insurance outside super is not tax deductible, but if you pay it in super, it is. Okay, so it's important that you get those right. Okay, so income protection outside super, tax deduction, life insurance inside super, tax deduction. Okay. The last item is also probably about travel, because a lot of people don't realise that you can claim a tax deduction for travel. A lot of people are put off by the thought of having a logbook and having to keep those tedious records, albeit it's only for 12 weeks, but they go, couldn't be bothered. There is another method, which is the cents per kilometre method, which allows us to claim up to a maximum of $5,000 without having to keep a detailed logbook. You just need to have a reasonable estimate of your travel. And this might be, for example, if you know that you go to a meeting at another site once a month, then that's your reasonable calculation. Okay, I go to this meeting once a month, and it's 20 kilometres each way. So, 20 times 12, that's the kilometres we'll claim. The other thing that people aren't aware of is that if you have two jobs, the travel between those jobs in any one day is also tax deductible. And so, I do know of a lot of women that might have several part-time jobs just for that flexibility. And sometimes they might go from one to another in one day. So it's good to note that that is available to you, and it is less cumbersome if you just want to use the 5,000 kilometre rule. But bear in mind, if you do travel more than that, it is very worthwhile. And I do encourage you to keep a logbook, although it is only for 12 weeks, because your tax deduction will be higher. You're really selling yourself short by just not being disciplined enough to keep those records. And it's not hard to keep those records. I mentioned the ATO app earlier today. There is a record keeping tool within the ATO app, the My Deductions, where you can literally log it as you're going.
That's fantastic. It's so funny because, let me just backtrack. So we met at an event and I was really struck with the work that you do, and it was very conversational, and I knew instantly that it would be great to have you as a podcast guest. But if somebody had said to me, okay, you're going to have somebody on, they're going to be talking about tax, you are going to be absolutely engaged and wrapped, I think I'd have laughed at them. But I swear to goodness, I have taken so many notes.
Oh, good. I'm glad I'm adding value and providing some useful information. Look, it is a very dry area. It is a very dry topic. And believe me, we have to sit there for 8 hours and just listen to keep updated. So it's not, the best of experience from my end, but I get joy out of applying what I've learned and being able to help people, maximize every single dollar. And that's why, a lot of people do go, I know, I just do it on e-tax, but you could be just losing on thousands of dollars year after year by not reaching out and, just getting some professional help in those areas. Because the way that we are living now with everything so expensive, if we can get an extra dollar from the ATO to help us in that, why not? So yeah, there's definitely, it is a minefield out there. Yes.
And I think it would be fair to say, please correct me if I'm wrong, but a good accountant should be able to save you more than their fee for doing the work. Yeah.
Correct.
Yeah.
Yes.
Yeah, great. Yeah, great. No, I'm really loving this conversation. And what I'm actually thinking, I didn't think of this before, but based on what you were talking about, I might just put together a little cheat sheet, unless there's something that you've got that we can share with the audience, because this information is gold. And what's good about it is that, as women, we do tend to be, we've spoken already about the gender pay gap and the gender superannuation gap. So any information like this, where it can actually save money and mean that there's more money to put into super or put into just having as savings and make our lives more comfortable, I think is really important.
Yeah, absolutely. You know, and any support that you can get from the government when you are on lower incomes, you know, you need to take advantage of that.
Yeah. So having worked with so many small businesses and families, what are some of the reasons that hold them back from taking control of their finances?
Yeah, such a good question. And, you know, as I mentioned before, you know, I see it all the time. One of the biggest things that holds people back from taking control of their finances is a mix of fear and overwhelm from that lack of education. You know, people bury their heads in the sand and feel overwhelmed by the thought of creating a budget or, you know, a forced savings plan and thinking, oh, I don't want to, you know, I don't want to give up this, I don't want to give up that. But as I mentioned earlier, it's just starting to look at your spending and your savings habits is enough to, you know, to first, to be that first step in gaining control. You know, the other issue is time. Between businesses, running kids, you know, households, it's easy to put your finances on the back burner. But the truth is when you take that little bit of time to do even the most basic of simple, you know, trying to implement a simple strategy, it will make a huge difference. Knowing, you know, not doing this means that you're going to be working harder and not smarter. You know, a lot of people are like, oh yeah, I'll do more hours. I'm like, well, no, you don't have to do more hours, or you don't have to find a higher paying job and try and kill yourself physically to do that. It's about looking at what you're currently doing. You know, what are some small tweaks that we can do to put us into a better financial position, right? And as I said, it doesn't require a financial planning degree to just have a think, you know, quarterly, sit down on your own with your partner, sit down. Okay, what are we trying to achieve long term? But let's take a step back. What are we just trying to achieve in the next 3 months? You know, quarterly business goals are like the minimum consideration, right? And it is achievable, okay? Mindset is so important, okay? It is that belief that you need to earn a lot of money to make it worth, you know, getting your finances in order is far from the truth. The earlier you take control, and this is, you know, teaching our kids to do that from a very early age, even in small ways, will make you better off in the long run. And look, you know, that's where an accountant or also your advisor can really help. Just having someone in your corner that can take some of that stress and guesswork and give you a few key pointers to get started. Okay, even just a basic spreadsheet or a basic, even if it's not on the computer, like literally on paper, just you know, with the next 3 months, what are your goals? How are we going to achieve them? Even just sitting that down and doing that will really be a great start, and it will really start to help you to think about this on a regular basis without being overwhelming and this task that is just monstrous. You know, and we're all human. When there's things that we're lacking in education and we're finding too hard, what are we going to do? We procrastinate. We put it on the back burner. Oh, I've got to do this. Oh no, this is more important. This is more important. But there is nothing more important than just sitting down and thinking about what you want to achieve in a very small time frame. And you'll find if you start doing that, you'll start to build on that. You know, and you won't have to do it as regular. You might have a 6-month plan and you'll stick to that strategy for 6 months. Then it'll become a 1 year. And I think what then is encouraging is that when you start to see those results of that little forced saving, it really changes that mindset because you have success. So whenever you have a goal and you get success, well, hey, that really worked. Let me do it again. So your mindset starts to change, and you have that growth mindset of wanting to grow financially and be better at and find better ways of doing it.
Yeah, absolutely. What I'm really enjoying about this conversation is that you make all of this really accessible, and it's so you explain it so beautifully. So it's not. I think that fear that people often have around their finances and looking more deeply at their finances is because there's so much jargon, and I think the media have a role to play in this, because there's number one, there's lots of choice. So you've been bombarded by lots of different things, and it's hard to know who to trust. It's hard to know how to explain and how all of this information is really relevant. But yeah, I just really want to bring it back to, I'm enjoying this conversation because you make it really easy and really relatable. So thank you for that.
Thank you. No, that's great. Look, I always find that trying to simplify things for clients is the best way forward. And I've had lots of clients that come to me from previous accountants who have created the most astronomical structures, multiple companies, trusts, all of this stuff that they don't necessarily need. And they do find it overwhelming. And then we're sitting there cutting. No, we don't need that. Let's get back to basics. So for me, when I dealing with clients, just keeping it simple is really important. And I've had clients come to me with, a spreadsheet that they've downloaded, because there is a lot of information that's available out there, especially online, which is great. It can be a really great tool. But it was even overwhelming for me. It was a budget, and it had, I don't know how many columns and rows where we're drilling down to the basics of food and, really, really, clothing. Like, that's overwhelming. You don't need to do that. And the other thing too that I find is that I say to clients, some clients have so many bank accounts, so many credit cards. Like I say to them, how do you even keep track of what's coming in and out? One savings account. If you've got an offset account against your loan, even better. Everything goes in one savings account. And if you can have one credit card and pay all your expenses on that one credit card, even if you're not keeping track of every little thing that's going through, you'll start to have a mental note of what your average cost of living is every month, because your credit card will generally be, the amount that's due every month should generally be the same. So that's without even sitting there and looking at every single item. You'll start to gauge, okay, I'm expecting, $3,000 is our average spend a quarter. All of a sudden you get one for $5. Oh, what happened that month? Let me backtrack. So even just doing that, very, very simple, almost budgeting, but having all your income and all your expenses in one area, in one or two accounts, is also just a really basic tool that you can start to take control of your finances. Because the more accounts that you have, there are leakages out there. And the question or the comment that I have all the time is, we're getting all this money, like I got a pay rise. Where's it all going? Right? Because there's leakages. You have multiple accounts. There's little things going out everywhere. There's even $10 bank charges going out everywhere. Why do you need all of that? And then using cash. I mean, if you can avoid using cash, that's also another good idea. If you're tapping all the time and recording all your expenses electronically, you don't tend to have that cash leakage, because that is also another method where it becomes unaccounted for. Right? Because you pull out the cash, you spend it, and that's it. You're never getting it. You might get your statement, but it's looking at where all your spending has gone in a credit card, so to speak, that helps you keep track of that a bit more mentally, rather than it five different bank statements that come through. It's just too much. So just even little things like that can help gain that control.
I love that, because one of my key words for this year is simplify. And it's just, you're right. When you've got so many, it's like having lots of tabs open on your computer.
Yeah.
It drains the computer's energy. It's the same with people, I reckon.
Yeah, very great analogy there. It is draining. Yeah, it is draining to keep track of all of that. And the hardest thing too, the other thing that I find now is that obviously everything's gone electronic. Okay. So at least you used to get a bank statement in the mail, right? And you'd physically open it up and go, oh. But with these electronic, like, you need to go in and download it. And really the reality is, who does that? So the more of that you have, the less inclined you're going to be to even go in and download your statement, right? Because you don't get it necessarily emailed to you. You get a link saying, oh, it's ready, it's up there, and you get caught up with everything else. So imagine when you have 5 of those, you're not going to go in. Right? So at least if it's one account, you can go in, download it and look at it. Like, even just do that. will help you.
Yep. Now, Lina, we're coming to the end of this episode, but there was one thing I really wanted to ask you about. And one of the things that I talk about in my work is values-aligned investing. So it's really about, we all have choices as to where we spend our money, where we invest our money. So how do we, what choices are we making? And when our spending and investing aligns with our values, then it means that our spending money is so much more joyful and fulfilling. You and I had a conversation before this podcast episode, and you mentioned about SMSFs, so that's the self-managed super funds. How do you believe that they help in this joyful, fulfilling, values-aligned investing and spending?
I love the self-managed super fund structure. And one of those reasons is because it offers control, flexibility, and really broadens your investment opportunities. As an SMSF advisor and as an SMSF auditor, I know there's absolutely nothing inhibiting investment in supporting, affordable housing or sustainability or whatever value-aligned investment that you want to make. Having a self-managed super fund allows to make investments into what matters to you. So we have that choice. You don't have that choice in an industry fund. So all you really need to do is, define what are your values, reflect this in your investment strategy, and then partner with, experts in their field like Dion, who not only understands the SMSF area, but also the area of her particular product, which is affordable housing and sustainability. So it's not, it's not an overwhelming task to do that. For women, well, not just for women, actually, for women and men, value-aligned investing is not just possible with a self-managed super fund and also with your savings outside super, but it is powerful, as you can grow your wealth while supporting the kind of world that you want to live in when you retire. And the way I see it is that flexibility, that control, that diversity of where you can put your investments is financial empowerment at its best. And it really is a vehicle that you can use to align your social values to also, but at the same time, also achieve your financial, retirement goals for the future. So absolutely support it 100%. And it gives, it just gives everyone opportunity to do this.
That was such a great note to end this podcast episode on. Thank you so much, Lina. I 100% believe in values-aligned investing, so it was really great to hear you share that so eloquently as well. Now, for anybody that would like to get in touch with you, anybody that might be in a bit of a tangle with their taxes and think, Lina's bloody brilliant, I need to get hold of her, how did they do that?
Probably best to, I think, Dion, if you want to share my email address. We also have, the office number. So feel free to, give us a call. We're happy to, meet up, whether it be in person or via web meeting. There's also on our website a contact little link there. So they're all the methods that you can get a hold of me.
Amazing. So I will put your email address and your website, I'll put a link to both of those into the show notes. So anybody that's watching this podcast or listening to it later can get hold of you. Lina, thank you so much. I love how you simplified everything. This has probably been the most riveting tax conversation that I've ever had in my whole life. I will be talking about it to my friends. I will be sharing it with my audience. And thank you just for being so awesome.
Oh, thank you, Dion. Look, it's a real pleasure for me to share financial information and share my hopes of everyone being financially empowered with that little bit of education. So, thanks for having me. It's been a great chat.
Awesome. Thank you.